Now, 2 weeks ago, we had a hawkish cut out of the Fed. The Fed turned extremely hawkish. We're now expected, based on Fed fund futures, the probability based on the betting markets, we're expected to get the Fed to pause. Now, 88.8% chance they're going to pause in January, continue to pause in March. Going to get a rate cut, and we're only going to get one based on the probability with the Fed fund futures. We're only going to get one more cut, and this fluctuates, and it's been fluctuating between 1 and 2. There are those that are predicting that we're going to get no cuts in 2025. That's it. It's over. It's done. Start raising rates to deal with inflation. Same kind of stuff they were saying back in 2007 before we got the emergency cut out of the Fed. We are entering recession. Get a whole lot more cuts out of the Fed in 2025. It's going to be because we're moving into recession. The Fed panic and begin to do emergency cuts, go forward with this pause right here. Next cut we likely see out of the Fed will probably be an emergency meeting, an emergency cut. Likely see the recession in the first or second quarter. Got a good shot. The stock market's going to peak in the first quarter here, possibly in January, as I've talked about. December or January, I've been looking for a top. You got a good shot the recession shows up in the first quarter. We move into the second quarter. I told you we could get some volatility with this before the Fed did that with the last FOMC meeting. Downsized the amount of rate cuts from 4 in September down to the last meeting, down to 2. The amount of rate cuts we're going to get in 2025. I told you that was likely coming, or it happened because the bond market was concerned about inflation. That's why we've seen the 10-year rise. The Fed continued to talk about concerns about inflation. I told you eventually we could see the market throw a fit about fewer cuts. The herd believes that they're bullish and they're actually bearish. They get their cuts, but it's going to be because we're going into recession. The market is still going to tank. When they do the emergency cut, the stock market, after dropping significantly, probably around 20%, is going to rally hard, going to celebrate. And then the bottom is going to fall out of the stock market. That's what always happens. The S&P 500 broke down from the triangle as Powell showed up at the last FOMC meeting as the Grinch that stole the rate cuts. Fed downsized the rate cuts from 4 to 2. The market sold off with the FOMC minutes, and Powell the Grinch prevented a Santa Claus rally. The triangle broke down rather than breaking out. As the press conference moved along, Powell moved from being the Grinch, stole the rate cuts, he moved being extremely hawkish during the press conference, showing us we need to see further progress on inflation to get more rate cuts. The Fed raised their forecast on inflation, lowered estimated rate cuts for 2025 from 4 to 2, and shockwaves into the markets. Told us how strong the economy was and that downside risks in the labor market have diminished. Economic activity is expanding at a solid pace. And he went on further to signal a January pause and telling us how the Fed's forecast on inflation has changed dramatically from just a few months ago. They're still on track to cut and now anticipating just 2 cuts down from 4. We need to see that progress on inflation. Oh, they're not going to get it. And after we get this hawkish cut out of the Fed, all the concerns about inflation, Powell said, clear. We've avoided a recession. Fed is hawkish when they should be dovish right now because we're about to get a recession. They're focused on inflation when they should be focused on the recession. The exact same monetary policy mistake that they made back in 2007. Inflation back then was higher than it is right now. Still went higher. I expect we're going to see inflation go much higher. We're still going to get the cuts out of the Fed because we're about to have a recession. Now, Powell's telling us how great the economy is, doing the hawk talk. Great economy, but he's concerned about inflation and telling us we've dodged a recession. Extremely hawkish. Should be dovish. Powell should have showed up as a dove, not a hawk. He should have got a dovish cut. It should be slashing rates, this quarter point stuff that we're getting. Right now, the Fed is hawkish when they should be dovish. When inflation was rising, they were dovish when they should have been hawkish. Back in 2007, they did the exact same thing. They're hawkish, all concerned about inflation. They should have been dovish. That's why we got the emergency cut from the Fed, because they were blindsided by the coming recession, focusing on inflation. They ignore the recession warning signs, looking at inflation, which is a lagging indicator. Sorry, just had to have some fun with all of that. Trying to make the complex understandable and keep you from being extremely bored when I talk about economics. Most people start tuning out, get distracted by something else when you start talking about the economy. A lot of times it can be a boring subject. But I don't think so. There you have it. Powell's running around telling us how strong the economy was or is, and how we, well, and just let me quote him exactly, it's clear we've avoided a recession. Did that in the press conference. Powell's running around telling us we've avoided recession and how strong the economy was, and oh, we better be concerned about inflation. They're keeping rates up too high for too long. They should be slashing rates right now. They're making another monetary policy mistake. More recession warnings. 2 weeks, just after 2 weeks of Powell telling us we've avoided a recession. I've been showing you the different recession indicators. Everybody was celebrating the coming of the new year before New Year's Eve and New Year's Day. We got on Monday, December 30th, we got the Chicago PMI, and it's now triggering a recession signal. It came in much weaker than expected. It was supposed to come in at 42.2. It came in at 36.9, and that is below the 40.2 reading we had previously. It was supposed to go up. Above that, it went down sharply. Now, this is a chart of the Chicago PMI. This is the business barometer, and it's now flashing a recession signal. 2022, we saw it drop below 50 and then remain there. That's a warning sign when you see these drops below 50. When you drop below 50, then later it's followed by a drop below 40. It's triggering a coming recession. Recession's about to start. Fed stopped QE, tapering. Signals started to weaken, showing that we might go into recession. We saw the stock market recover. Didn't end up going into recession on hopes of the tax cuts and buzz around the 2016 election. Deregulation, the tax cuts, and all the rest of it, and that fueled the next rally. Later, the Fed would do more QE after the pandemic, but we never dropped below the 40 level. Well, we just did that here this week before New Year's Day. We dropped on the 30th, December 30th, down to 36.9, dropping below that 40 level. Huge warning sign for recession. Every single recession that we've had, marked by these gray shaded areas, dropped below the 40 level, except this one right here in the 90s. It was a very brief recession, very mild recession, dropped below 50. We still saw the contraction, and a contraction is below 50. Not a recession, but we didn't drop below 40. All the other recessions start with the drop below 40 after dropping below 50. It happens one of two ways. Usually you start getting this drop before the recession starts, like we did in 2000, just before the recession hit in 2001. Even January there, get the turn, it starts dropping, and you get the turn, and right here, right when it moved below 50, recession already started. We tried to see it turn back up, but then again, it had a nosedive, up dropping below the 40. So again, it begins to turn down just ahead of the recession, or it turns down with the recession. That's what we've seen, turning down, being below 50, the recession, and then moving down to the extremes, 40. Below 50 is a contraction, beginning to turn down with the recession. Seeing the PMI fall off a cliff here. Signal we got on Monday, dropping below the 40 level and now dropping down to 36.9, is warning you we're about to have a recession. And you could see that when that's happened before, recession was just about to start, or we were already in the recession. Recession is right around the corner, folks. This is the kind of stuff the Fed is ignoring. Powell just over 2 weeks ago, telling us how strong the economy was, but yet the business barometer here with PMI telling us, you're going to have a recession. That's what it's telling you. Every single one of these signals, when we've dropped below 40, has been associated with a recession in the entire history of the indicator. Tell me now we're going to have this soft landing. Now it's different? Oh, this time's different. Yeah, right. That's a bunch of poppycock. Falderall, balderdash. Oh, I love saying that. Well, Powell is hawkish when he should be dovish. Again, the Fed is blindsided. The Fed is blindsided when inflation, 4% to 7% in 2007, kept telling us it was transitory. And then finally, by March of 2022, extremely dovish in 2021 when they should have been hawkish, 2022. And then finally, they started their raising campaign in 2022, as I correctly predicted, by the way, back when they were telling us the first rate hike is going to be in 2024. It was a year that we just finished. That's how clueless the Fed is. Off by 2 years. Predicted that they were going to start in March of 2022, still telling us that the first rate hike was going to be in 2024. That is how far off the Fed is. Oh, they're focused, laser focused on inflation when we're about to have a recession. This is telling you we're about to have a recession. I believe the recession indicators. The Fed doesn't. They dismiss them. That's why they're so blindsided every time the recession happens, like they were in 2007. Why we're going to get an emergency cut. We've met the criteria. We've dropped below 50, and now we've dropped below 40. It's telling you recession is about to start, and probably we're going to see it in the first quarter in all likelihood. If not by the second quarter, as I've predicted, we're going to get a recession in the first or second quarter in all likelihood. I believe the recession indicators. Time we've dropped below 40, we've had the recession show up. We're already in recession. No, but this time's different. Yeah, right. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to support the channel today. I don't have any sponsors, just a direct relationship with you. I turn all those offers down because I don't want to sell you a bunch of stuff you don't need. But that's how channels make their money on YouTube. I just ask that you take a moment and partner with me. Let me know you want this information, you like this information by supporting the channel today. Follow the link below to take you to a secured site, and you can donate any amount you want. If you take a moment to do that, I thank you for that. I'll post another video Sunday morning at some point. Let you know momentum is still negative here for the NASDAQ. With the momentum line is still negative. Try to turn bullish with the counter trend, turn right back to bearish. I see momentum signals turn back to bullish if we're going to turn it around. See momentum turn bullish with NVIDIA. We're seeing it turn bullish with Bitcoin. Will NASDAQ 100 be next? We got a big rally. Gave us a bullish signal here, but is it just a counter trend, or will we get that momentum turning back to bullish? This gray shaded area forming, telling us that a squeeze move is coming, but it's not done yet. So just some things to be aware of here for NASDAQ. It's got to flip back to bullish to get a bigger rally or try to challenge the high. A topping tail in the monthly time frame. We'll be watching it. NASDAQ's doing the same thing. Now, Bitcoin did this right before momentum turned back to bullish, which is now bullish. It got a bullish signal, and then it was followed by another bullish signal, and it ended up flipping the momentum line. So we'll see what happens here with that. We are forming a bullish divergence here with momentum. So again, momentum can flip back to bullish. We can get the recovery, and we can go back and try to make new highs. Momentum at the moment, again, momentum is flipping with Bitcoin and the S&P and NASDAQ being next. We did get the momentum line flipping here, but something very similar. Again, we had to back bullish buy signals as momentum began to flip at horizontal support. Again, S&P is trying to bounce off the support trend line. It's kind of slanted a little bit. Bitcoin's doing the same thing. Interesting. They both had head and shoulder patterns. Watch my latest Bitcoin video. I'll link it at the end of this one. You can see the signals for yourself. It is pretty interesting. Will likely end up reaching that upper channel line before all is said and done, and possibly here in January. Flip the trend signals back to bullish with Bitcoin, but again, momentum is trying to turn bullish. And flip the trend signals back to bullish, advance can resume. So is this suggesting the bullish breakout on NVIDIA and the momentum flipping on NVIDIA, suggesting that the stock market NASDAQ and the S&P and the Dow and the Russell, are they going to try to rally back up? The Russell's taken a pretty good hit. It's food for thought. Very interesting. We're getting a very similar signal that we had here with Bitcoin Wednesday, last trading day of the year, and the first trading day of the year, Wednesday and Thursday. And now we're seeing some of the similar will show up here on the S&P and NASDAQ. We're also seeing the bullish divergences on the 60-minute chart of the S&P give us the bounce and the rebound. So again, is this the start of a reversal now? If momentum can flip to bullish, we could see that happen. The bullish reversal of conditions. S&P is trying to bounce here. If it stalls at the moving averages here, it's trying to creep back up above the 50, the green line right there, and the 10 period. The 10 is still below the 20, but if it gets a bigger drop, that 100 period and the gap fill still come into play at 57.83. If we did do that, again, you would have a potential channel, a larger channel. But if we build upon this low right here, again, you'd also have that be a new channel developing or larger rising wedge. Momentum still in the negative region here. S&P has got to get back above that 200. It's stalling at the 50 here. The 50's got to get back above the 200. If we're going to go back and fill these gaps over here on the S&P 500, 5-minute chart, we got back above. We gapped higher back above the 200 period. We pulled back, had this trend line at the pullback, and then we broke through the trend line from this peak here and right here, and then the 50 got back above the 200. So it's bullish. So again, we may have a double bottom pattern here. If we can find support and, again, get a decisive push back above the 50, we're just inching above it right now. Again, the risk is that we get a bigger drop going back to fill the gap here and hitting this parallel boundary to that black bold line right there, or coming back down to the 200 if the head and shoulders plays out here. But is what we're watching. See if we attempt a recovery that flips the momentum signals all back to bullish, gets a bullish reversal of conditions. We don't have that yet, bullish reversal of conditions, but if we can get it, then maybe this dotted blue line right here from our low on Thursday, maybe that becomes the new channel line. I've drawn a parallel boundary here, just above the solid black line right there, that bold black line. And is a new channel developing, and it very well could be right here. We did not go back to fill the gap. We don't have to do it at a later date. But if we do, again, that bold black line then comes into play. Momentum's still bearish. We could still reach it, but if we try a bigger rally, as some signals are now suggesting, we can flip momentum, and maybe this dotted blue line becomes a new channel. And if we rally towards it, as I have the arrow here, a big rally, something like what we had back over here in August when we had the July sell-off, we had the August low, we get this big rally that just kind of went, parabolic for a while. It's something like that in January. Again, you've got potentially a channel off of this level. So we'll be watching the bold black line right here at the gap fill at 57.83. I'll be watching this trend line right here. Again, we broke this trend line right here, and we got back above it. So again, confirmation, no follow through. Then back over here when we broke the black trend line with the Fed. Again, you've got a very feeble confirmation bar. I mean, you can't really, that's very convincing. There's no follow through. Like I said, even the low of this bar right here, we're not taking that out, or the close right here to get any kind of a follow through to the Fed sell-off. Do we have a double bottom? Possibly having a double bottom right here that could expand the bearish rising wedge now into a larger channel. So just some parallel channels and trend lines that I'm watching here. That MACD can get back into positive territory, well, that would be a plus. The bullish scenario, we just got a 4.5% pullback, and we're now going to resume the advance with the potential double bottom pattern. And if we get a rally into the upper channel line of the black line or the blue line or whatever, even the red one, we can move closer towards that trend line in the weekly time frame that I've talked about. We're getting a timing tail at the 20-week moving average. Looks like a hollow red candlestick. So again, can we make our way back up there? And if we do, then again, daily time frame, we can have a channel and we can make our way to the upper channel, this longer term channel here that we never did reach. And again, about 9 weeks or so of not being able to reach that upper boundary ever since the election rally. We have not been able to reach that upper boundary. We've come close, but we haven't been able to reach it. So again, probably going to try to reach it right here, right now in the first quarter, and very well could reach it here in January. I told you I was looking for a peak in January or December in all likelihood for these divergences to begin to play out. A 4.5% sell-off, but I think we'll bounce off the 20-week moving average. I still think we're going to reach this level. I still remain bullish here in the weekly time frame, anticipating that we're going to reach this area. My double bottom pattern plays out on the S&P daily chart. Well, we can move to new highs there and form that channel in the daily time frame. Okay, we had a breakout on NVIDIA out of the bull flag. I told you there are two possibilities. One, we have a head and shoulders and we start to break down of the channel, or we bounce off that lower boundary of the channel in the weekly time frame, not seen right here. And sorry about that, had to cough. Throat is a little worse still from New Year's Eve. Apologize. I sound a little raspy. We had a breakout today on NVIDIA on Friday, and we got back above the 50-period moving average. The 10's now getting back above the 20-period moving average. I gave you two scenarios. One, we get a head and shoulders, we get a lower high, and we end up going down and breaking the channel line. And we have NVIDIA peak with the earnings rally that we predicted would happen up to this upper trend line right here. I told you there's major resistance here in the weekly time frame, longer term, at this trend line, and I told you we were likely going to turn. We could go up and try to hit the trend line again, slam into the longer term trend line. Can we get a higher high with NVIDIA? This divergence gave us this sell-off, first 14% and then a lower high, 13.5%. From the high down to the low, we've dropped about 16.5%. Now we're breaking out. We'll be watching, because if we now can rise, try to make a new high, bouncing off this trend line right here and the 20-week moving average, we can go back up to this trend line. If we do hit that, we'll slam up into the major trend line of resistance, long-term resistance in the weekly time frame. This channel is just going back to the low of 2022. I'm talking about a trend line that goes back for the entire price history of NVIDIA. That once this trend line right here breaks, that we will see a termination of the bull market for NVIDIA. For the AI stocks, the AI bubble will burst, and I think it will terminate the bull market for the stock market. We have this major triple negative divergence going on, and we could see one right here in this most recent price action and go up and hit that trend line, going a little bit higher than our previous peak. About both of those scenarios, the lower high scenario with the head and shoulders, or the push higher to go up and slam into this trend line, which would hit the trend line once again in the weekly time frame. Long term, that would take NVIDIA back up to this long-term channel. This is the weekly chart, longer term. The channel you just looked at on the other chart is this channel right here from the 2022 low. This goes all the way back to all the data that we have since NVIDIA started trading. Slammed up into the trend line with earnings just as we did previously at the June high. Could we hit it again? Possibly. But I think that we could get a lower high or go up and hit this trend line again, maybe even overthrow it a little bit. We did at the June peak. Then I think we're going to come back and we're going to end up breaking this trend line. So even if we rally up to it and turn down, or rally up and overthrow it, or still get that lower high scenario, however it plays out, I think we'll end up getting rejection at this trend line, just like we're likely going to get rejection there on that monthly chart for the NASDAQ, the S&P, and the Dow. Long-term charts. We got a doji and a bottoming tail a couple weeks ago, 3 weeks ago on NVIDIA, bouncing off the trend line. And the 20-week moving average still trying to do it. Now we're getting this traction up on NVIDIA for the weekly close. That can help the market rally in January. Getting bullish signals out of Bitcoin. And again, the two assets with the most volatility, turning back to bullish. It's likely the S&P is still going to try to make that new all-time high that I've been talking about near weekly trend line. I do think this is the most important trend line in the stock market right now, because I think when this thing gets a decisive break, I think that will terminate the market for NVIDIA, the AI. It'll likely cause the bursting of the AI bubble, terminate the bull market for the S&P and the NASDAQ, for the entire stock market. If NVIDIA can rally back up, it's getting a bullish reversal of conditions in the weekly time frame, and it's breaking above the 50-day moving average. Can we see a recovery here with the NASDAQ? The NASDAQ has moved up to the 200 and the 50. They're about to get across here on the 60-minute chart, but we have these bullish divergences. The last one right here, the last bullish divergence gave us this big rebound back up. And here on the MACD, it recycle back up, and then we have a divergence now. So here's a divergence. We start the new year off with volatility, Thursday's trading session, and then now we gapped higher, and we have bullish divergences, which again I talked about yesterday, the bullish divergences that are bottoming tails here on the 60-minute chart. So again, bullish divergences as we start the new year, we're going to try to rally. Question is that topping tail in the monthly time frame going to hold as a peak, or again, does it not get a lower high, or do we get back-to-back reversal bars, which is interesting? And let me just talk about that for a moment. We had this topping tail on the NASDAQ 100 and the NASDAQ Composite in the monthly time frame. You get 1 bar per month. We're trying to rebound right now. Do we get a lower high and then end up confirming this thing before January ends or on into February? Or do we get another possible reversal bar, back-to-back reversal bars? That's common as well. We don't have to go very far back on the monthly chart here on the NASDAQ 100 to find it. And that was at the 2022 top. We actually had a topping tail in the form of a shooting star. We have a gravestone doji, and we rallied back up. We ended up getting month we got a doji. We did not move to a new high. We actually got a lower high, just slightly lower, but it led to the reversal and a 37.5% sell-off. So do we get another type of reversal bar here? We'll see. Lots of different candlesticks that or patterns that could end up forming, but we'll be watching to see what becomes of NASDAQ should NVIDIA rally Bitcoin. And if Bitcoin rallies, guess what? The NASDAQ is now Bitcoin Junior. It has exposure to MicroStrategy, which has massive exposure to Bitcoin. Bitcoin and MicroStrategy are probably going to go up and make another high, form a negative divergence on their RSIs in the weekly time frame. If you want to see my latest Bitcoin video, link it at the end of this one. But I talk about MicroStrategy time to time, and I recently talked about that. Bitcoin's going to do that. You can see the charts if you watch the video. It's pretty interesting. Bitcoin has a positive correlation with the market. If we start seeing Bitcoin and MicroStrategy and NVIDIA all begin to top and then have all this volatility, goodness, the bottom is going to fall out of the NASDAQ 100. It's going to be too much for the NASDAQ to handle. Saw MicroStrategy added on to the NASDAQ 100. So just something we're paying attention to here in the monthly time frame. These monthly bars, especially since we got a topping tail, you got to assume the topping tail's a top until proven otherwise. Turn right off of that trend line in the monthly time frame that I talked about. See that right here. This is the NASDAQ 100 monthly chart. We went up, slammed into it, got that topping tail, and we turned off of it. And we did that beautifully. I'll zoom in here to show you, again, the 2000 top, the bursting of the tech bubble is a topping tail. We never did recover back up. We may do it here, but no guarantee. Rally in January, you got a shot at it. Turning off of this trend line long term, you're probably forming a major top right now, and the top is possibly in on the NASDAQ 100. Now, the NASDAQ was up 1.67% today. Here on Friday, up 350 points. So again, getting a rebound. We're rebounding off that 50-period moving average. We got back above the trend line here that we broke this trend line from our low with the Fed sell-off. And again, with that break of the trend line, there was no confirmation, no follow-through, as I've talked about. That's what's necessary for your decline. And right here, now, we're coming back and breaking this trend line from the low, and we're still not confirming and getting a follow-through to the low of that break right there, which we didn't even close below it. So watching if the move is done. Now, I've talked about a parallel channel. If we end up going lower, and we have, again, the fill down here from the presidential election rally right there at 20,227. So we're going to be watching that. You got your horizontal peak right here from the July peak, horizontal support, I should say, that we're just above that level right now. So can we be on our way to resume the advance, maybe go higher? We attempt to take out that topping tail. Remember, topping tail has not yet been confirmed. Again, and the candlestick is meaningless until it is confirmed, and then you got to get a follow through top of that. RSI is trying to get back in positive territory here, above 50. We've had the divergence over here that gave us this sell-off back to our 50-period moving average. So just some things to be aware of. If we do get a bigger sell-off, you get your 100 and this trend line right here, parallel boundary to the blue trend line. So just some things to be keeping on the radar screen here. MACD has not gone negative. Still may end up forming a divergence if we can go higher. We did reach the trend line in the monthly time frame. We never did reach it the time frame. We were just shy of it. And if we can rebound back up, we got to see momentum turn back up and get back above the 20-period moving average, the blue line. The 10 is still below the 20, but they're both still above the 50 as we're trying to bounce off the 50-period moving average. The bullish breakout on NVIDIA on Friday could help the NASDAQ. Bitcoin, which also momentum turned bullish. Thursday, more bullish signals on Bitcoin. That would help MicroStrategy, which would help the NASDAQ as well. The NASDAQ composite did hit the upper channel line here going back into 2022. We did not do it. We didn't quite reach it there on NASDAQ 100. That composite also has divergences. NASDAQ 100 with the linear scaling fell just shy of that trend line, the black trend line right there. And if we exclude the shadow, the red trend line, we hit it. That's it. And right now, again, we're trying to get a bottoming tail around the 10-week moving average not seen here. We didn't reach the 20. The NASDAQ is trying to bounce off the 10-week moving average. The P is bouncing off the 20. And if we do rise higher, again, we could hit that trend line still, but we did get that topping tail in the monthly time frame, so we're going to be watching that closely. And let me repeat, I think that we could get a rally. We'll have to see if NASDAQ can make new highs. I think the S&P will. I don't think the Russell will. I think the jury is still out on the Dow and the NASDAQ. The NASDAQ moved above that upper channel line from the pandemic low. We had this channel from the 2022 low, the October 2022 low, and the 2021 high in November. We moved just above that trend line. The NASDAQ composite slammed right into it beautifully. So the NASDAQ composite has hit some interesting trend lines long term. Going back to 2020, the question now is, can the NASDAQ 100, can it make a new high? And will the NASDAQ composite, given it has reversed off of those trend lines, that channel from the NASDAQ composite monthly time frame, again, a topping tail right off that upper boundary. We hit that other channel that I just showed you from the 2020 lows, and then we hit this channel spot on. If I bring them both up here together, it'll be interesting to see if the NASDAQ composite will get above it. Again, we hit the upper channel here from the 2020 low and the 2022 low, and then we hit the upper channel right here from 2022. So kind of interesting. Can we get above that level or not? If we don't, does the NASDAQ 100 do it? NASDAQ composite turned off of that trend line. NASDAQ 100 overthrew it. This is QQQ, overthrew it and then dropped back below it by the end of the month. This is a monthly chart of QQQ. Some things to be aware of as we possibly setting up for a January rally. Momentum signals have to turn back to bullish. We've had momentum back to bullish on our rebound back over the last 3 weeks with NVIDIA. We got momentum turning back to bullish day before Christmas Eve, December 23rd. Now we're pushing above the 50 period. Momentum still remaining bullish. I think you're going to see the oscillator go positive. The MACD did on Friday with that big rally. We were up by 4.45%, nearly 4.5% of a rally there with NVIDIA on Friday. Helped the NASDAQ. and we bounced off that 20-week moving average. Now we're flipping the cloud in the weekly time frame on NVIDIA back to bullish here, getting a blue bar. So again, I think you're probably going to see more green oscillator bars. Completed divergence, as I said in this most recent price action, likely moving above this high. You could confirm a lower high, but you still may get that divergence going up and slamming up into that trend line again that we just looked at. So I think you'll see, again, the stochastic turn up, the oscillator turn back up, and we're getting some bullish signals bouncing off that key major trend line. And that could be suggesting, again, that we see new all-time highs on the S&P 500, maybe the NASDAQ, probably get a larger counter trend, Russell, and possibly the Dow. The Dow still might diverge with the transports, still may make another new all-time high, but watching, I think the S&P is likely going to do it here in January. Just like NVIDIA, we're seeing Bitcoin get a bounce this week, and it's turning back to bullish. Could this be opening the door for a January rally? I think Bitcoin's likely going to reach the upper boundary of the channel. It didn't do that over many, many weeks here. It came just shy of it, just like the S&P 500. The momentum's flipping back to bullish Thursday and Friday. The momentum line turned back to bullish on Bitcoin, and then Bitcoin got a bullish reversal of conditions on Friday. So could that be setting the stage for a January rally, as we're seeing an attempted rebound on both NVIDIA and Bitcoin? NVIDIA broke the downtrend Friday. Bitcoin broke the downtrend on Thursday in the daily time frame. If we're going to attempt to rally back up, NASDAQ and S&P have to have momentum turn back to bullish, and trend signals all got to be bullish if we're going to try to go higher. Right now, we've seen momentum flip with the Fed over here. That bearish inside day, I talked about that. We saw the Fed sell off. We rebounded back up, couldn't flip the cloud, sold off, tested the 50 period. Here we were just above it. And then now we're trying to rally. We were up on NASDAQ 1.67% on Friday, up 350 points. If Bitcoin and NVIDIA can lead a rally higher, the market may follow suit. The NASDAQ 100 in the weekly time frame got a red oscillator bar. The S&Ps had them. It's now getting it. Remember, the S&P and the Dow, they peaked in early December. Well, NASDAQ went and made new highs, peak until mid-December. Also peaked in late November. Trying to bounce off this 10-week moving average. Again, if we can get traction here, try to diverge with the S&P 500 or go make new highs. If we get more red bars and we get a solid push below the 10-week moving average and flip the cloud here, then again, versions could be complete. Remember, we got that topping tail in the monthly time frame, that gravestone doji, so we're watching that closely to see if it will be confirmed in the month of January. Again, S&P is just under that 10-week moving average, and again, trying to get a bottoming tail at the 20-week moving average. We'll see if we try to bounce or break. Bounce off that 20-week, or do we break it? Russell's already got red going on. If we try to bottom out or go a little bit lower and try to bottom out, I'll be watching the upper end of the cloud here in the weekly time frame, the 10-week moving average. Back in 2022, when S&P went and made a new high, the Russell just got a really feeble rally back up. Something like that this time, or do we get more of a powerful rally? But again, we still could go lower. So we see the momentum signals in the daily time frame begin to turn back to bullish for the market. Not there yet. We have seen them now begin to turn back to bullish with both Bitcoin and NVIDIA, so the others might try to follow. So did get with the rally a bullish reversal of conditions, but you can see the little arrow there that's going to flip the cloud come Monday, but the bar is still red after, again, about an 11% sell-off or so. Trying to rally back up again, 340 points there on Friday, but we're not flipping the cloud yet. I'll be watching to see if we do. Again, the S&P can go make new highs. The Russell will likely make a lower high, and then the Dow could do either one because it still may diverge with the transports. And again, we'll be watching to see if the NASDAQ has peaked with the topping tail we got in the monthly time frame. And again, we've got to flip these clouds back to green with NASDAQ, the Dow, S&P, the Russell's now doing it, but we got to flip them back to green if we're going to get a larger rebound or move to new highs. Dow's also testing that 20-week, and we were below it, and now we're just right at that level, but we did flip the cloud. We're below the 10-week moving average. here in the weekly time frame. Again, going to be watching to see if the Dow can recover lower high or a higher high. See the Dow and the Russell recover after, sell-offs, then we could see the S&P push to new highs, and we'll be watching to see if the Dow does it or not. That topping tail hold on the NASDAQ.